Bitcoin is a scarcity asset because most of it isn't actually available to buy anywhere, and that number keeps shrinking. Right now, a large portion of Bitcoin hasn't moved in over a year, and exchange balance have been trending down. That means fewer coins are sitting on exchange ready to be sold. So even though you see the price on the screen, that price is coming from a smaller and smaller pool of available Bitcoin. And this is where people get it wrong. They hear 21 million coins and think that's the scarcity. It's not the full picture. The real pressures come from what actually available right now, the Bitcoin you can still buy, and that's been getting tighter over time. Think about it like this. If there's all 50 coins in existence, but only 5 are actively for sale, the real market isn't 50, it's 5. That's the direction Bitcoin is moving toward. More coins are being pulled off exchanges, move into cold storage and held long term. So every time that happens, that's one less coin available for the next buyer. And here's the part that really matters. Over time, this becomes less about price and more about availability because people assume I'll just buy later. And you still can. Bitcoin isn't going anywhere, but later might look very different. It could mean higher prices or less available supplies at those levels or both. So even if you have the money, getting the amount you want may not always be as easy as it feels today. And that's a different ways to think about it. Not timing the market, but understanding how access can change over time. Now, here's something else that confuses people. Because someone watching this is probably thinking, if that's true, then why is Bitcoin going down right now? That's a fair question because short-term price and supply are not the same thing. Price is just what people are willing to pay right now in the moment, while supplies is what actually available over time. And those two don't always move together. Bitcoin can drop for simple reasons. Trader taking profits, leverage getting wiped out, macro fear, interest rates, war headlines. Sometimes it's just more sellers than buyers in that moment. That surface level moment, but underneath that, the structures hasn't changed. Coins are still leaving exchanges. Long-term holders are still not selling. Institutions are still accumulating. So while price move down is temporary, supplies underneath can still be tightening. And what you're really seeing is a disconnect. On the surface, it looks weak. Underneath, it's gradually getting stronger. And when those two connect, it doesn't always happen slowly. Now zoom out. This pressure is coming from multiple directions at once. ETFs are bringing institutional money. Long-term holders are sitting on coins. Miners are producing less after every halving, and some are holding. And corporations, even governments, are starting to step in. So this isn't just a normal cycle. This is supplies tightening while demand builds over time. And at some point, these two meet. And when they do, price can adjust quickly. This is where people tend to make the same mistake. They think they have plenty of time. They wait, they watch, they try to get the perfect entry. And sometimes the market moves faster than expected because in an environment like this, Bitcoin doesn't always move slowly. It can move in waves, in chunks, in ways that catch people off guard. And that's when the question shifts from should I buy or can I still get what I wanted? That's the shift. No panic, no hype, just understanding how the structure is evolving. And I'm not saying that's to create urgency. And I'm saying it because the underlying dynamics have been changing. Supplies has been gradually tightening, demands has been growing, and larger players are participating more consistently. So at the end of the day, this isn't really about predicting price days to day. It's about understanding what's happening underneath because the supply size of Bitcoin doesn't expand, and over time, that matters. So maybe it moves sideways, maybe it pulls back. That's always possible. But if this trend continues, eventually that pressure showed up in price. And when it does, it tends to move faster than people expect. So from where I'm sitting, this isn't about chasing price. It's about being aware of how access, could change over time, and making decisions with that in mind. At the end of the day, this isn't about hype or timing the market. It's about recognizing what's happening while you still have access. Because the real shift doesn't happen when people want Bitcoin. It happens when they realize it's not as easy to get as it used to be. And my friend, make sure don't forget to hold it tight and stack it right. Take care.